Hello guys, welcome to my channel, and this video is simply a request from you guys in the comment section asking me how can we get sniper entry or how do we enter a trade. Okay, and that's why I'm shooting this video, and I'm going to reference a trade I took in January, okay, for this particular word explanation. Now, first of all, what is a sniper entry? A sniper entry is simply an entry with little or no drawdown. Meaning, if you have a structure like this, something like this, okay, and probably your point of interest is somewhere here, and immediately you put in your limit order, okay, a long position, put in your limit order to go long once price gets to that place. Now, if price approaches, touches your limit order, and then from there move, okay, that's what we call a sniper entry, okay, meaning an entry with little or no drawdown. Okay, you can see the price didn't go deep into the point of interest before what reversing, and mostly you can get your sniper entry in the lower time frame, but however you can still get a sniper entry in the higher time frame. So this is not only pertaining to what the lower time frame. You can actually, if you're a swing trader, maybe this is your 1 hour chart and this is the level on the 1 hour, and if price approaches that level and trigger you in, then move immediately out, that is a sniper entry. Okay, so that's what I want to show you here. In this case, I'll be looking at what the lower time frame to explain this. Okay, so before you can trade a sniper entry, before you can get a sniper entry, you should have a trading plan. Ask yourself, do you have a trading plan? What do you want to see on the chart before you execute your trade? The goal is not to get sniper entry all the time. No, from your trading plan, sometimes when the trade is executed, it could be a sniper entry. Sometimes it can take a couple of drawdown before price move in your trading direction. Okay, so don't be obsessed with sniper entry. I'm only doing this so that you understand what sniper entry is, okay, whereby price touches your limit and then move in the opposite direction. So in your trading plan, you must have these three things checked. Okay, your directional bias. What is your directional bias? Are we bullish or are we bearish? Do you want to be a buyer or do you want to be a seller? Now, within that directional bias, what is the structure forming? In this case, you want to determine the institutional order flow. You want to determine the institutional order flow. Okay, where is the money going to? Where is it coming from? Where are the banks? What is the direction of the banks? Are the banks buying or are they selling? This is the institutional order flow, the order in which they are moving price. If they are going bullish, then the order flow is bullish. If the banks are going bearish, the order flow is bearish. Now from there, you should have your point of interest. Now, before I continue, there are two types of entry. Okay, there are two types of entry. You have the first one, I call it the risky entry. Example, this, you have price doing something like this. 1 minute. You have price a break of structure, okay, and immediately price approaches your point of interest here. Maybe this is your point of interest on the higher time frame. You execute the trade. Okay, price comes in here. This is your entry, then it moves. In this case, it's risky in the sense that, or I will call it an aggressive entry. Aggressive or risky entry. Okay, because you don't wait for confirmation. And in this case, you can still get your sniper entry. Price touches this and then move out. This is an aggressive entry. Okay, sometimes I take this. It all depends on the conditions of the market. Sometimes I take aggressive or risky entry, but most times I wait for the other type, which is the confirmation, okay, entry. Now in this case here, you have your point of interest here. You have your point of interest here. But instead of what trading directly, I will then switch to the lower time frame to look for something of this nature. Okay, when price gets in here, breaks out, then I look for my point of interest here. When I confirm a break of structure, probably that is my entry there, and then price will come in here and then move out. Okay, so this is confirmation. Okay, confirmation entry. Okay, whichever one you want to use is up to you, and it all depends on the condition of the market. As I said, sometimes I take my entry here aggressively, maybe on the higher time frame chart. I wait for price to just tap it and then move on, and there are reasons for that. This I will disclose to my mentorship student. Okay, now we have the confirmation as well. Okay, the advantage of this one is that you might not miss trade. Okay, you might not miss a trade, but it's risky. The win rate is slightly lower compared to the confirmation. So it all depends on what you're looking for. Okay, so having that out of the way, let's go to a chart and see how to get a sniper entry. The entry was given, I posted it in my Telegram. Okay, before now we have a downward push in price. This is the order flowing price, bearish on the euro USD. Okay, and price started retracing back, and I was placing my my point of interest on this demand zone here, this entire demand zone, and I was trading in here. Okay, but this particular day is this particular move here. Okay, this particular move. So when price move into this what is it called, the point of interest, you can decide to maybe you should reduce this to the 50% level, which was what I was looking at, because this particular order block might not be okay to hold price, because we have some liquidity above. So I simply put this on the 50% level. Now as price approaches this, then I switch to the lower time frame, and in this case I switch to the 1 minute time frame. Then we go to the 1 minute time frame, and we observe price. So let's play price. So we watch price. As price move, switch to the 1 minute, you observe price. Okay, let's play price. Okay, you see, so all you need to do is to wait for a break of structure. Okay, wait for a break of structure. As price is moving, you can see now at this point here we have a break of structure here. So this is our break of structure. I have to make this very fast. I will explain some couple of mistakes that we could have made. Okay, like going backward here, you have a break. In this case here, going backward here, we do not have a clean break. The kind of break we are looking for is a sweep of liquidity. Okay, a clear sweep of liquidity, and a sell, a pressure down to break structure here. Okay, so once the price has broken structure, then I have my point of interest here. So I'm trading off this with try to sell from this particular imbalance field candle. We are having a 2.5 pips. 2.5 pips. That was okay. Then the target lower. So as price approaches, you can see That's the sniper entry. Little or no what drawdown. Little or no drawdown there. Let me shift this. You can see as price touched, it move out immediately from there. So that is our what sniper entry. And with practice you will get this right, okay, especially when you move to the lower time frame. Most of the time your entry on the lower time frame will be a sniper entry. So that concludes this video on how to get what a sniper entry. The best bet for you to get a sniper entry is to simply use the confirmation what entry criteria on the lower time frame. Most times the point of interest on the lower time frame will hold, and in that case you have a very small pips to play with, and by so doing it gives you a very big risk to reward ratio. Your reward is more than your risk. So if you have any question, put it in the comment section, okay, and don't forget to, if you are new to this channel, make sure you subscribe and hit that like button and also the notification bell, so that when I release content like this, you will be the first to be notified. On that note, the next video here will teach you how to understand liquidity. Most traders struggle because of lack of knowledge of liquidity. So the next video is on liquidity, understanding liquidity. I will see you in that video.